Bitcoin holds $110,000 as traders await key U.S. jobs data. Bitcoin is holding firm around $110,000, while gold has reached fresh record highs. At the same time, traders across global markets are waiting for one critical signal: Friday's U.S. jobs report. Why are these assets moving together, and what does it mean for investors? Let's break it down. Earlier this week, Bitcoin climbed about 2.7%, bringing it back toward the $110,000 level after several days of sideways trading. This price zone is more than just a round number. It's a psychological milestone that attracts attention from both retail traders and institutional investors. Holding steady at such a level often sets the stage for the next big move up or down. Right now, sentiment leans bullish, but traders are cautious. Everyone knows Friday's data could make or break the rally. Gold, the world's oldest safe haven asset, has also been breaking records. For decades, investors have bought gold to protect against inflation, recession, and political risk. But in recent years, Bitcoin has entered the conversation as digital gold. When both assets rise together, it sends a strong signal. Investors are broadly looking for hedges against uncertainty. Gold offers tradition and stability, while Bitcoin adds volatility and the potential for outsized gains. So why is everyone so focused on the upcoming U.S. employment numbers? Because the Federal Reserve's next policy decision hinges on the state of the labor market. Signs of cooling: fewer job openings, slower wage growth, higher unemployment would strengthen the case for a rate cut. Lower rates usually weaken the dollar and make borrowing cheaper, encouraging investors to shift money into riskier assets, including stocks and crypto. In other words, a weak jobs report could act as fuel for Bitcoin's next leg higher. For nearly 2 years, the Fed has kept rates high to fight inflation. But now inflation is slowing while growth is losing momentum. That changes the question from how high must rates go to how long can they stay this high without pushing the economy into recession. Investors are forward-looking, and futures markets are already betting heavily that the Fed could cut rates in the coming months. Bitcoin and other cryptos are responding in advance. It's not only Bitcoin in the spotlight. Ethereum has been trading flat, while Solana has shown stronger activity, gaining traction as an alternative blockchain play. This reflects a familiar pattern. In uncertain times, Bitcoin acts as the anchor, while altcoins either lag or wait for momentum to spill over. Meanwhile, stocks, bonds, and even commodities are moving in sync with expectations for easier monetary policy. So what does all of this mean for investors right now? In the short term, Bitcoin will stay sensitive to U.S. data releases, especially Friday's jobs numbers. Expect volatility. In the medium term, if the Fed signals it's ready to cut rates, Bitcoin and other risk assets could push to new highs. In the long term, the dual rise of Bitcoin and gold reinforces the idea that both assets are now part of the hedge toolbox against economic and political uncertainty. Bitcoin stabilizing around $110,000, gold breaking records, and traders waiting on Friday's report together. These paint a picture of markets on edge. The next few days could be decisive. For investors, the message is clear. Keep an eye on the data, because the Fed's response may set the tone for both traditional assets and digital ones. Stay tuned, and if you find this breakdown helpful, don't forget to subscribe for more finance explained simply.